What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Now, I apologize in advance. Um, I know you can hear nature, bro. Nature is alive and well tonight. That is probably 1,000 frogs and insects, probably tens of thousands of insects out here. We just had a few nice days of rain. That's when things really come alive out here, okay? These things are busy. So I apologize for all of that noise in the background, but hopefully it adds a little ambiance to the video, nice relaxing soundtrack, backing track or something like that. But I wanted to go over this chart with you from last week on gold on Friday, okay? This is such a nice chart, right? And the reason why I wanted to show you this chart and go over this with you is to show you the two different ways we are really using the daily process to mark up our charts and to take trades based on our markups. Okay. So there are two ways to trade this. We're either going to be marking off our clear high and low range on the current day, right? And then waiting for one of those sides to be broken and then reverse. Okay. Or we can mark off a coil, right? We're looking for these parabolic coils. So we can mark off our coil and wait for a break and retest type of entry. And we could do either or on this day. And so that's what I wanted to show you here, okay? So you can see on this chart, we have a very clear high and low range on this day, okay? We have a high from the Tokyo session, which begins at 8 o'clock, okay? 8 o'clock to 11 o'clock. So we have this high put in place in Tokyo, right? We have a low put in place in the London session, which begins here at 2 a.m., right? So there's our very clean and clear high and low range. So when we're marking off those levels of the current day, right? Because we're always using the previous day's high and low. We're always tracking the previous week's high and low. But on the day of the potential trade itself, we are marking off highs and lows on the day. Okay. So when it comes to marking off those highs and lows of the current day, we're always looking for that to be a very clear range. If this market is super choppy and it's all over the place and you really have a hard time identifying which high and which low you should be using, I don't even worry about it, right? I want this thing to be clear, very clean, all right? You understand what I'm saying? That's how I know that I'm looking at this high and this low. And on this day in particular, it just so happens that that high is in the Tokyo session window, right? And the low is in the London session window. So it's very obvious we have a peak formation high in Tokyo, a peak formation low in London, right? That gives us a very nice range that we can mark off, right? And as you can see, this market pumps up from that London low and eventually going into New York breaks out of the Tokyo session high. Okay. This is triggering higher time frame traders into the market in the form of 4-hourly traders. We're breaking previous session levels. So it's true. We're not breaking a previous day's level, right? And triggering in daily time frame traders. We're not breaking the previous week's high or low and triggering in weekly time frame traders, but we are still triggering higher time frame traders into this market, okay? The trap is being set and sprung, okay? There is money sitting above that high and below that low, okay? So when we come up here and we break out of that Tokyo high, traders start buying that, right? Now, if smart money is trying to sell high, they have a very large position that they need to sell, right? What do they need? Well, for every buyer, there's a seller. For every seller, there's a buyer. So if they're trying to sell, they need buyers to take the opposite side of that trade. And where can they find those buyers? Above that recent high of the Tokyo session. So they trigger those buyers in the market here at this level. and then sell aggressively into those buyers, which gives us this dramatic sell-off that goes from one side of the range to the other side of the range. That's our ACB setup. We need to see trapped volume at the high or at the low. And in this case, we are seeing that trap volume at the high. Okay, once we break the high of that Tokyo session. You understand what I'm trying to tell you here? You can literally see the trap with this large M pattern. That M pattern, this is a 1 minute chart, right? But on a 15-minute chart, this is a large engulfment or a pin hammer. That is what is literally trapping traders in those losing positions, okay? They're all buying here. So as soon as we engulf that, right, they are all trapped here, buying into the high of the day unknowingly, okay? They don't know that. They're not trying to buy high, but that's what they're doing. They get trapped and taken for a major loss. Accounts are being liquidated with a trade like this, okay? So that is the first way we could trade this, by simply marking off our most recent clean and clear high and low range, waiting for one of those levels to be hit and reverse, okay? And I'm saying reverse because I like trading reversals. This market could have just as easily continued to go higher. And in that case, we would not be looking for it to hit the level and reverse. Instead, we would be looking for it to break out of that level, pull back on top of that level, and then continue going higher for our long entry. But me being short biased and liking to trade reversals, this is the ideal scenario for me to see when I come to my charts to trade, right? Now, another way that we can mark off this chart and trade it, which is just as easy in my personal opinion, okay, is marking off a coil, a parabolic coil, right? And then waiting for a break and retest. And this day, like I said before, we got both options. We could have been marking off either or, and you could have gotten the easy trade, okay? So here, right, because check it out. We have this London low. We pump up. Then the market coils sideways for an extended amount of time going into that New York open, right? So here we're just marking off the high and the low of this coil. That is this rectangle, right? There's our highs, there's our lows. We're marking that off. And then we're waiting for the market to do something. We don't want to predict which side is going to break out, okay? We don't want to be getting inside of that box or inside of that coil. Instead, we want to wait and let the market just show us what it's doing. And once it becomes obvious, then we can get into this market, all right? So you can see here, we break out of the high of that box, okay? We print a large M pattern on this 1 minute chart, okay? This is what we might call a false break, okay? We break out of the high, but then we immediately trade back into that box, okay? So we have effectively had a false break of the high of that coil or of that box. Once that happens, all right, there's two ways, we could be entering here. When we have this M pattern, once we break down below the middle structure of that M, we could be entering here. The problem is that this happens just before our 8:30 open. So if you're disciplined and you're waiting for that opening bell to ring, you might not have gotten in here, right? But this large candle, that is your 8:30 candle, right? And you might decide to get in there because that's 8:30 once we maybe break this low right here. Or maybe you get in a little early. I don't like to get in a little early, all right? Because I know that anything can happen. Instead, I might be waiting for a more conservative entry, which we do get, okay? So look, we have that false break of that high, and then we actually break out of the bottom of that coil. And you can see the difference here, right? When we have the false break, we barely break out of the high, and then immediately we're back inside of that range. Okay, we break out again, and immediately we're back inside of that range. That's going to be typical of a false break. If we were going to continue higher, the market should quickly, right? We're not going to spend a lot of time at that level. We're going to break out, coil on top of the level, and then continue. We're not going to spend a lot of time there, but here we spend a lot of time near those highs, right? And we're not pushing away to the upside. We're actually pushing back into that range. That is sort of characteristic of a false break, right? But with this 830 candle, this is a real forceful and convincing breakout of the lows, okay? This is what a breakout looks like. We're pushing away very quickly from that level. We're not spending a lot of time at that level. This market is moving with intention, with force and purpose, okay? That's what a breakout looks like. That is characteristic of an actual breakout. Compare that to the false break up here, right? Now, this is one of the easiest ways to trade. When you have an easy to identify coil, all you're doing is marking off that coil. That's your box, okay? That's your parabolic coil. We break out of the low of that box. Now we're just waiting for a retest, which we get relatively quickly, okay? We break out, then we pull back. We're retesting that level, all right? And then we start to fail again. And once we break through these lows, we're entering the market. That's your conservative break and retest entry right here, okay? And you can see, again, it happens right here. So you didn't even have to get in right here. You could get in off of this one where we have broken out, pulled back, coiled sideways, break down. When we break this sort of death line right here, you could be getting in here or waiting until we break this low and getting in here. That's a safe and conservative entry. Why am I calling it a safe and conservative entry? Huh? The reason I'm saying that is because we have clearly broken out of this low, okay? Retested and continued to go lower. So we are not inside of this coil trying to guess if we're going to go high or go low, right? The market has already broken out. It's already shown you what direction it wants to go in. So you can safely and conservatively enter this market short when you see this happening, right? So I hope that helps you guys out. I'm trying to prepare you for this week coming up. Make sure that you are marking off those levels, either a clean and clear high and low range, all right, before the session opens, a clean high, a clean low. That's your box. Project it horizontally. Train your eyes to move horizontally at the level. Inspect how price is behaving once we return to either that high or that low. Once it returns to that level, there's only two options, okay? We're either going to, let's say we go back to the high, right? We're either going to break out of that high, coil, pull back and coil on top of that high and then continue higher. Or we're going to break that high and reverse and go lower. And that's what we got here, right? The other way that you're going to be marking off your charts is looking for the parabolic coil. And you're simply going to mark off that coil. Where's the high of that coil, or where are the highs of that coil? Where are the lows of that coil? And project that horizontally on your charts. And then you're simply going to wait for the market to break out of either side, retest the level, retest that box, and then continue in whatever direction, right? No predictions. You're waiting for the market to show you what it is doing. Once it shows you, once the market maker reveals their hand, you can go ahead and slap the shit out of them. You understand what I'm saying? So I appreciate y'all for being here, man. I hope this video makes sense. And until next time, I hope you continue to free your mind.